Is Canada's housing affordability rebound losing steam? A new RBC report suggests the gains that we've seen in the past 18 to 24 months may have already reached their limit. So let me break this down, what this means for buyers, for sellers, and for anyone who's watching the market. From late 2023 through mid 2025, falling interest rates plus flattening home prices plus rising incomes combined to ease affordability pressures. But RBC says those tailwinds may have peaked. Now, further progress likely is going to depend on price drops or strong wage growth, both of which are far from guaranteed. A worrisome trend is that employment is softening and income growth is slowing. That weakens the very foundation that was supporting affordability. Here's the not so good news if you're in the Greater Toronto area. Looking at different regions, Ontario has been singled out as especially at risk with high jobless rates and sectoral pressures. Vancouver remains among the least affordable markets. And Calgary, our friends in Calgary, that's emerging more favorably thanks to strong supply and elevated inventory levels. So what does all this mean? It means that buyers may have less room to depend on improving conditions going forward, at least in the short term. Sellers could face pressure if demand doesn't pick up. And for investors, regions with supportive fundamentals where supply is strong and job markets are more stable, that may offer better opportunities. So the bottom line is that for buyers who are waiting for conditions to improve, we may still see opportunities with prices coming down a little and rates coming down. However, things can change really fast. And if you're waiting for the bottom, you won't know it's the bottom until it starts to improve. So if you want to dig into this full RBC report to see how this might apply locally to your city or your neighborhood or your own personal situation, I can help you dig a little bit deeper. Drop me a message and comment, and I'll share any insights that I have.